Welcome to Simple Investing Secrets, your trusted source for uncovering the finest stocks to buy and discovering cutting-edge investment strategies to build enduring wealth. In this captivating and enlightening video, we will analyze 12 dividend stocks that are currently undervalued and worth considering for your investment portfolio. So before we begin, we kindly request that you like this video and subscribe to our channel for weekly updates. Let's get started. When considering undervalued dividend stocks, it's crucial to examine both the dividend yield and the overall financial well-being of the company. A high dividend yield may be attractive, but if the company is struggling financially, it may not be able to sustain the dividend in the long term. A discounted dividend stock is a stock that is trading at a price lower than what is considered to be its intrinsic value or its true worth. In other words, the market has undervalued the stock. This can happen for a number of different reasons, such as a company having temporary money problems or the market as a whole going down. One way to identify a discounted dividend stock is to look at its dividend yield. The dividend yield is the result of dividing the stock's share price by the annual dividend payment per share. A high dividend yield can be an indicator that a stock is undervalued, as the dividend payment per share is relatively high compared to the stock's price. Investors who are looking for income may be attracted to discounted dividend stocks, as they offer the potential for a high yield on their investment. However, it's important to note that a high dividend yield alone is not enough to make a stock a good investment. It's also important to consider the company's financial health, growth potential, and other factors before making an investment decision. Now let's take a closer look at our list of the 12 undervalued dividend stocks that could be valuable additions to your investment portfolio. Number 12. Crown Castle, ticker CCI. Crown Castle is a real estate investment trust that owns cell towers. The stock's price began declining in early 2022, and it's continued to slide. Some analysts say this is a right-sizing of the stock's valuation, given that cell tower REITs were overvalued for many years. Analysts expect the company to remain profitable, as it has for years, growing earnings by 3% this year, before net income declines by 2% in 2024. There's an easy explanation for why Crown Castle's dividend is so high. Because it's structured as a REIT, Crown Castle is required by the Internal Revenue Service to distribute at least 90% of taxable income to shareholders in the form of dividends. This requirement is intended to provide investors with regular income from the real estate properties held within the trust. It also allows REITs to avoid taxation at the corporate level as long as they meet this distribution requirement. Crown Castle yield is 6.31% and its annual dividend per share is $6.26. Number 11. Pfizer Incorporated, ticker PFE. Pfizer is a drug company that makes and sells medicines for a wide range of illnesses and conditions. The company has a dividend yield of around 3.6% and a long history of paying dividends to its shareholders. Buying the stock today and taking advantage of its high dividend yield of almost 4% could be a great move for long-term investors. Pfizer's stock price as of April 1, 2023, was $47.72. Pfizer's shares are down by 20.3% in the last 12 months, and if you're willing to hold on to them for the long run, this stock is a great option for buying on the dip to gain a passive income stream. The stock's forward price-to-earnings ratio of 10.6 is well below the drug manufacturing industry's average of 13. The current stock price represents an opportunity for value investors to pick up shares of Pfizer before the market warms up to the stock. Number 10. Kraft Heinz Company, ticker KHC. Stocks of companies in the packaged food industry as a whole have been in decline since May. Kraft Heinz shares have struggled for even longer, posting a year-to-date drop of 16.24% and a one-year drop of 9.14%. However, this is a defensive stock. You could even make the argument that mac and cheese is among the ultimate recession-proof products. Wall Street sees the company's earnings growing by 4% this year and another 3% next year, indicating that the sell-off may be a bit overdone at this point. The company lost market share in a few categories last year, some of that due to supply constraints, but is working on a plan to regain lost ground. Market beats Kraft Heinz analyst ratings show a consensus of hold with a price target of $42.54, an upside of 27.48%. Kraft Heinz yield is 4.79% and has annual dividend per share of $1.60. Number 9. IBM, ticker IBM. IBM is a technology company that provides software, hardware, and consulting services to businesses and governments. The company's dividend has been a constant. Management has raised it for 27 consecutive years. From a cash standpoint, the dividend payout ratio has climbed over the past couple of years. The company has a dividend yield of around 4.5% and has a history of increasing its dividend each year. IBM's stock price as of April 1, 2023, was $132.49. Number 8. Coca-Cola Company, ticker, KO. Coca-Cola is a beverage company that produces and sells a wide range of soft drinks, juices, and other beverages. The company has a dividend yield of around 3.3% and has a long history of paying dividends to its shareholders. The Coca-Cola Company stock price as of April 1, 2023, was $58.87. Number 7. ExxonMobil Corporation, ticker, XOM. ExxonMobil is an energy company that produces and sells oil and gas products. The company has a dividend yield of around 5.9% and has a history of increasing its dividend each year. ExxonMobil's stock price as of April 1, 2023, was $64.20. Number 6. Procter & Gamble Company, ticker, PG. Procter & Gamble is a consumer goods company that produces and sells a wide range of products, including household cleaning products, personal care products, and food and beverage products. The company has a dividend yield of around 2.4% and has a history of increasing its dividend each year. Procter & Gamble's stock price as of April 1, 2023, was $142.19. Number 5. Walgreens Boots Alliance Incorporated, ticker, WBA. Walgreens is a pharmacy and retail company that operates a chain of drugstores in the United States and around the world. The company has a dividend yield of around 4.2% and has a history of increasing its dividend each year. Walgreens Boots Alliance's stock price as of April 1, 2023, was $56.41. Number 4. Chevron Corporation, ticker, CVX. The Chevron Corporation is an American multinational energy company that mostly works with oil and gas. Its headquarters are in San Ramon, California, and it operates in more than 180 countries. It is the second largest direct descendant of Standard Oil and was formerly known as the Standard Oil Company of California. The company has a dividend yield of around 5.2% and has a history of increasing its dividend each year. Chevron Corporation's stock price as of April 1, 2023, was $115.24. Number 3. General Electric Company, ticker, GE. General Electric is a diversified technology and manufacturing company that makes a wide range of things, such as aircraft engines, equipment for making power, and tools for imaging the inside of the body. The company has a dividend yield of around 0.3% and a history of paying dividends to its shareholders. General Electric's stock price as of April 1, 2023, was $106.62. Number 2. Merck & Company Incorporated, ticker, MRK. Merck is a drug company that makes and sells medicines for a wide range of conditions and diseases, such as cancer, diabetes, and infectious diseases. Merck has a presence in several therapeutic areas, but the company's oncology business is its most important. The key asset here is Keytruda, a cancer drug that has racked up numerous indications in the US and abroad. The company has a dividend yield of around 3.2% and has a history of increasing its dividend each year. Merck & Company's stock price as of April 1, 2023, was $88.16. The company's forward price-to-earnings ratio is about 14.8, compared to 14.2 for the pharmaceutical industry. Merck merits a premium given its prospects, which is why even at current levels, the stock remains worthwhile for long-term investors. Number 1. Energy Transfer LP, ticker, ET. Energy Transfer, an energy transportation specialist, operates an extensive pipeline network for natural gas and crude oil. It also has storage facilities and renewable energy projects. The company recently said it would buy rival Crestwood Equity Partners for $7.1 billion. Mergers in the fuel infrastructure business are becoming common as it's increasingly difficult to construct new projects. The company participated in the broad energy rally last year, despite earnings declining. Analysts see a further drop of 8% this year, before growth resumes in 2023. As a group, midstream companies are out of favor, with investors potentially concerned about demand for fossil fuels over the longer term, and what that might mean for the industry. For the moment, analysts are still predicting that growth will pick up again, with analysts seeing another boom in the next few years, before a downward trend begins in earnest. Energy Transfer LP's yield is 9.55% and its annual dividend per share is $1.24. While fast-moving growth stocks are in a slump, investors can still generate a return with dividend stocks. These days, with growth having been the rip-roaring asset class in the first half of the year, Plenty of high-quality stocks are trading at discounts relative to their value, and many of these offer high dividend yields. It's still likely that 2023 will finish with a positive return, given historical data, but returns will likely be more subdued than in the first half of the year. That's a good reason to include dividend payers in your portfolio. Let's review some of the key dividend investing concepts. High yield. Getting a high return on your investment is one of the best reasons to buy discounted dividend stocks. This can be particularly attractive for investors who are looking for income, such as retirees. Potential for capital appreciation. Discounted dividend stocks may also have the potential for capital appreciation, or an increase in the stock price over time. If the company's finances get better or if the market gets better, the stock price may go up, giving investors a chance to make money. Diversification. Investing in discounted dividend stocks can also provide diversification for your portfolio. By investing in a variety of stocks across different sectors and industries, you can spread your risk and potentially reduce the impact of any one stock's performance on your overall portfolio. Potential for dividend growth. Many companies that pay dividends have a history of increasing their dividends over time. If you buy dividend stocks at a discount, you might be able to benefit from future dividend increases as the company's finances get better. Discounted valuation. When a stock is trading at a discount to its intrinsic value, it may present a buying opportunity for investors. If the stock price eventually rises to reflect the company's true worth, investors may benefit from potential gains. We'd like to thank Moomoo for sponsoring this video. And as a limited time special, Moomoo is offering up to 16 free stocks and a cash reward when you open a brokerage account through our special link. Moomoo will give you up to 16 free stocks plus a $50 cash reward, including one free share of Tesla or Expedia Group. So click on the link in the description to get your free stocks today. As is the case with any financial endeavor, the utmost importance lies in diligently conducting thorough research and analysis before making the decision to invest your hard-earned money, whether it's in purchasing stocks or venturing into the dynamic world of the market. By taking the time to truly understand the intricacies, potential risks, and anticipated rewards, you empower yourself with the knowledge needed to make well-informed and prudent choices that align with your financial goals and aspirations. This essential step ensures that you're equipped to navigate the ever-changing landscape of investments, fostering confidence in your decisions and ultimately leading you towards a more secure and prosperous financial future. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.